Good morning, all. Welcome to the SBI Securities Daily Market Podcast. Here we will be discussing views on Nifty and Bank Nifty along with Fin Nifty with key inputs on derivative data as well as cues from the FII open interest data. We shall also be discussing a bit on the USD INR pair and its probable move for the day as well as coming few sessions. Yesterday, in the morning, we discussed that despite the charts exhibiting bearishness and indices closing at weekly lows on Friday, the pace of the fall is slow, the volumes are missing, and hence we should wait for 19200 levels to decisively break for forming a firm view on the downside. Indices yesterday took support at 19250 levels, did not breach 19200, and we saw once again a move up to 19350. However, finally index closed 0.3% in the green, but an outperformance was witnessed yesterday from Bank Nifty and Fin Nifty, and action continued in small cap and the mid cap stocks. US markets yesterday ended with 0.6% gains apiece, while the Asian markets are mildly trading in the green currently. Gift Nifty is also indicating a 25 to 30 point higher start for the day. With this being an expiry week, let us understand how the open interest positioning is there in Nifty. So if we come to the put side, highest open interest is visible in 19300 followed by 19200 strike price. So we feel that 19200 and 19250 zone, this zone could act as an important support once again until this trading zone, till the support zone of 19200 250 is held. Indices could continue trading in this tight range and witness once again a rebound up to 19400 430 on the upside. Now, why is this level of 19430 450 important? Because there is this 20-day exponential moving average which is placed there, and a lot of times in the past several sessions indices have witnessed resistance from these upper levels. So we feel that this zone of 19450 should be crossed for any reversal pattern to materialize. If we see the calls data, 19400 as well as 19500 calls have seen the highest open interest yesterday. So the immediate resistance would be at 19430 followed by 19520. Yesterday in the morning session, we had discussed that Bank Nifty was a bit more stronger than Nifty, and it did outperform yesterday, closing exactly at the 20-day exponential moving average, which is placed at 44500. A lot of put writing is witnessed in 44300, 44400 and 44500 strikes, with call short covering visible in 44200 and 44400 calls. So this implies that going forward, 44200 44250 zone will act as an important support on the downside. Resistance now shifts to 44650 on the upside, where there is a confluence of the 20-day as well as 50-day exponential moving average, and along with this 44500 calls are having significant open interest. So in case in the morning we see index sustaining above 44630 44650, we could be in for a short covering bounce up to 44800 44900 on the upside in case of Bank Nifty. Speaking about Fin Nifty, which has weekly expiry today, there the index has been trying to form a support around 19630 19650 zone, as we saw yesterday as well as on Friday, and both the days we have seen the index outperforming Nifty. So range for the day in case of Fin Nifty could be 19650 on the downside and 19900 on the upside. If we see the open interest data, significant call writing is visible in 19900 strike price, while put writing is visible in 19600 and 19700 strikes. So this means that 19600 to 19900 could be a fair range for Fin Nifty today. Let us understand what the FIIs have done yesterday in terms of the data positioning. FIIs have been net sellers in cash to the tune of 1393 crores, while DIIs have been net buyers to the tune of 1264 crores. If you look at the open interest data of the market participants, FII's long short ratio, which was 40% on Friday, has once again improved to 43% as of yesterday. This is primarily because FIIs have turned buyers in index futures. They have also covered a lot of their short positions in call options, as well as they have sold fresh index puts. So this data positioning looks a bit better compared to the previous few sessions. In terms of stocks as well as sector specific momentum, we saw some good bullish moves yesterday in banking, capital goods, paints, pharma, power, railways and chemical stocks, and we expect the positive momentum in these sectors to continue going ahead also. Coming to USD INR, USD INR in the last couple of days has started trading in this range of 80 to 30 on the downside and 80 to 85 on the upside. Now remember, 80 to 85 is the 20-day moving average. So we feel that this zone of 80 to 85 has to cross for any substantial move on the upside up to 83.10, 83.20, while on the downside 80 to 30, 80 to 35 zone will act as an important support. If we see the pair breaching below 80 to 35, then there could be some kind of a move up to 81.80 on the downside. So overall the range for the pair today could be between 80 to 30 and 80 to 85. Few data points are scheduled in the US markets today and tomorrow, which will act as an important trigger for the US equity markets as well as the dollar index. Now remember, last few days we have been discussing that the dollar index is trading at elevated levels of 104, which is very important. Now we need there has to be some retracement in the dollar index up to 102 half, 103 for the USD INR pair to sustain around 80 to 30, 80 to 50. But if we see the dollar index moving beyond 104.50, 105 levels, then once again we could see the depreciation in the USD INR pair. So the key here to track the USD INR pair would be to track the dollar index and 104.50 and 105 levels on the same. So that's all for today's episode of SBI Securities Daily Market Dose. We hope you enjoyed listening to the podcast and found it useful for your trading decisions. Do tune in tomorrow for more market related updates and insights. Until then, happy trading, stay safe. Thank you all.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.